we're going to be covering one of the most important presentations out there. And we're going to be looking into the current investment landscape. And I'm going to be covering what was said in the Blackstone presentation. I'm also going to be covering all the important parts so that you can navigate on how to invest and how to deal with the economic situation. More importantly, you'll be able to understand what's working, what's shifting, and where the smart money is going. Now, besides the economy, the most important part is AI's growing impact and the opportunities in the private markets. So, if you haven't already, stop what you're doing. Take a paper and pen and take notes, because this is going to be very, very informative with a lot of golden nuggets. So, first, in the Blackstone presentation, they talked about, Jean Gray talked about the economic backdrop, which is a sign of strength. So, despite the ongoing challenges like inflation, geopolitical uncertainty, and tight monetary policy, there are clear reasons for optimism in the current environment. So first, look at the revenue and margin growth. For example, Blackstone's US private equity portfolio reportedly nearly 8% revenue growth in Q2, with margins expanding. That's not what you typically see heading into a recession. Now, the inflation is cooling. While many worry about sticky inflation, proprietary data, especially on shelter cost, suggests it's cooling faster than official CPI numbers indicate. And Blackstone's internal data puts shelter inflation just above 2%, compared to the government 3.6%, bringing us much closer to the Fed's target. Now, as far as the labor market easing, hiring pressure is also easing. In early 2022, labor shortages were CEO's top concern. Now it's dropped to number 9. Wage growth has moderated below 3% for the first time since the pandemic, which is encouraging for inflation stability. Now, what about cost of capital declining? Well, as inflation slows, interest rates are likely to follow. Lower base rates and narrower credit spreads benefit business borrowers and long-term investors by lowering financing costs and increasing the value of future cash flows. Now, as far as the IPO market, it is reopening. After being effectively closed in 2022, the IPO market is showing signs of life again, critical for recycling capital and improving liquidity in private markets. Now, what did Blackstone say about the AI? Well, they said it's going through a transformational shift. Artificial intelligence is more than just a trend. It's shaping up to be the next industrial revolution. And I've already called it a while ago. I see this happening. As far as the investment boom ahead, we're at the start of the major investment cycle in the foundation AI infrastructure. So think about data centers, chips, energy. That will likely be followed by a significant productivity boom. Now, for the historical parallel, think about back in mid-90s. The internet era drove a 3-fold increase in productivity and a 5-fold increase in stock market over 5 years. While we're not predicting the same trajectory, the potential economic impact of AI is substantial. The signs are very, very visible according to Blackstone. AI is already displacing certain roles, particularly entry-level software development and customer service, showing that adoption is underway. Now, where would you want to invest? Well, the real opportunity isn't just the headline tech names, but in the infrastructure, the picks, and shovels powering AI. This includes data centers, energy transmission, semiconductors, supply chains, and cooling system. But when it comes to AI, there's a massive CapEx spend. So just four companies, Microsoft, Amazon, Meta, and Google, are projected to spend over $364 billion on AI-related infrastructure. That's more than the annual budget of NASA, the U.S. Department of Energy, and the State of Department combined. And there's a really, really important critical piece here, which is energy. U.S. electricity demand, which was flat for 25 years, is expected to rise by 40%, largely due to AI, reindustrialization, and autonomous systems. That creates opportunities in renewable utilities, transmission, and energy infrastructure. Now, moving on into the private markets, and Blackstone sees a big opportunity here. Alternatives continue to play an increasingly important role in portfolios, not just for returns, but for diversification and access to non-correlated growth. So look at private credit. They are leading. With traditional banks pulling back, private credit has stepped in. It offers higher returns through a more direct lending model, cutting out intermediaries. This structure has helped sustain attractive spreads even as base rates fluctuate. Now, expanding into real economy, private credit isn't limited to corporate loans anymore. It's expanding into aviations, digital infrastructure, renewable energy, and consumer finance. We're still early in the growth cycle. At 13 trillion, the entire alternative industry is still the size of just 4 public U.S. companies. While the global investable market across equity, credit, and real estate is over 300 trillion, the runway for growth is substantial. Now, the 401k could be the game changer here. Defined contribution plans currently allocate just 1% to private investments compared to over 30% for pension plans. Over time, this shift could introduce a major capital stream into alternatives. Now, the next part, which is the investment opportunities that Blackstone is watching. 1. Commercial real estate. After challenging stretch, CRE is showing signs of bottoming out. New supply is down sharply, especially in logistics, and repriced assets paired with lower capital costs may present entry points. Secondaries. The secondaries market has grown but still represents only 1.5% of private equity AUM. In contrast, public equities turn over 100% annually. This imbalance suggests ongoing opportunities for discounted entries. India and Japan. India is the fastest growing G10 country, driven by infrastructure development and a growing middle class. And in Japan, corporate governance reform and shareholder pressure are unlocking value in legacy firms. Now, as far as regional banks, regulatory shifts could lead to consolidation, creating potential opportunities for private credit and M&A. Life science. AI is driving innovation in healthcare. But high trial costs mean capital demand remains strong, a gap private capital is well positioned to fill. Now, reinsurance, like a private credit, it offers the potential for strong uncorrelated returns by providing capital directly to insurers, especially relevant in a higher risk world. Now, in a rapidly changing world, what is Blackstone's approach to that? Well, with all this opportunity comes risk. The biggest one we see as far as Blackstone right now is understanding the pace of technological change. Disruption is accelerating. Think about what ride sharing did to taxi medallions. Entire industries can be reshaped overnight. AI risk is now front and center. So Blackstone has even made AI risk analysis and is a required component on the first 2 pages of every investment committee memo. both for equity and credit deals. This signals how seriously the industry is taking it. Now, we all have to talk about the elephant in the room, which is the bubbles. Well, the AI wave will almost certainly bring speculative excesses. Overbuilding data centers without clear demand signals is a risk. But the most important part is the discipline. Discipline is the key. Now, with other macro risks, high levels of government debt could push rates higher again. Regulatory challenges in Europe and geopolitical tensions between the US and China. They all remain on top of mind risks that must be accounted for in your portfolio construction. So, to wrap this all up, while risks remain, there's a strong case for optimism. Inflation is easing. Capital costs are moderating, and we're at the beginning of what could be a generational shift driven by AI and private markets. Staying diversified, disciplined, and forward-looking has never been more important. So, if you like more insights like this, subscribe now, hit the share, and if you have any questions, let me know down below. What was your favorite part? Let me know in the comments. And hit the bell button if you haven't already. Stay tuned for the next video. Peace.